Welcome to this presentation of How Many Indicators Should I Use? This is the Specialist Trading Weekly Stock, E-mini, and Forex lesson. Well, that was a question that was asked of me in one of our students' emails this week, and I'll answer it in detail when we go into this week's webinar. But before we begin, as always, I ask that you please take a moment to view our disclaimer. I'm going to show you some performance results in answering the question how many indicators one should use in their trading. But please remember that we can in no way guarantee that any of these results will be repeated in the future. So please take a moment to view our disclaimer, and then we shall begin this week's stock, E-mini, and Forex lesson. All right, I'd like to start off with the email that was presented to me this week by one of our members. It starts off by saying, "Dear Stephen Primo, I am a new specialist trading member and have begun to immerse myself in your methods. Although I find your strategies extremely simple, I'm a little conflicted because I was always taught to trade with a number of indicators. In other words, using one to confirm the other. My question is, how many indicators should I use?" This comes from FL. This is a great question because I always relate back to when I first started trading, and I've made no secret about it. When I was a specialist, when I first started out being a specialist, my first year I struggled tremendously, and I was doing all the things that I had been taught to do. I was listening to a lot of news, I was getting involved in far too many markets, and I had far too many indicators on my screen. In fact, I was watching at one time more than 10 indicators. Even though this is a snapshot of something that was taken off the internet, this is what you can make your trading to look like. You can really overcomplicate it and put on far too many indicators, far too many things to be watching. Now, I know a lot of traders can view this and say, well, this is what we were taught to trade with. This is the way it should look. And now anyone in the world can overcomplicate their trading. It doesn't matter if this snapshot you're looking at right now comes from a seasoned trader who's been trading for 50 years or someone who's just been trading for maybe 50 minutes. Anyone can do this. You can make your trading look something like this or even something like this. Because for some reason, as traders, we've been taught the more complicated you make your trading, the more successful you will be, or the more chances you'll have for success. And you'll be using a ton of indicators to confirm one, and one will confirm the other, and one will confirm the other. And this is really too complicated way of trading. My mentors taught me that it's the most, it's the easiest thing in the world to complicate your trading, but it's the most difficult thing in the world to simplify it. So what you want to do is you want to simplify your trading as much as you can, cutting down on all of these things which were referred to me as useless noise. My mentors taught me to keep things as simple as possible because, once again, we've been taught that the more complicated your trading is, the more chances you have for success. But in my 36 years of trading, I finally discovered it's actually the opposite. The simpler your trading is, the more basic you can keep it, you're really increasing your odds for success. So what we're looking for at specialist trading is not to hit home runs, even though that may happen every once in a while. We're not looking for tons and tons of winning trades that are generating 300, 400, 500% the way you see many other websites promote their software or their particular trading methods. What we're looking for at specialist trading is consistency. We're looking to hit singles. And the way you get that consistency is through simplicity. All right, keeping your trading plan as simple as possible. Most of our methodologies and strategies have no more than 5 or 6 rules, with using probably 1 to 2 indicators at most. Now let me show you what we mean here. Let's look at a few signals that were generated by our different strategies in the stock, E-mini, and Forex markets going back just 2 or 3 months. Now here's Facebook, FB, a very popular stock right now in the news a lot of action going on, a lot of news. As you can see, we only applied one indicator looking at daily bars going back to the beginning of the year. That's the 50-period simple moving average, our buy-sell line. And within that time frame, we generated 3 winning signals, as you could see here. 2 buy signals and 1 shorting signal. And as you can see, each one would have been profitable. How many indicators were we using? Just 1. Everything else, we were just looking for a specific pattern or a specific setup going back roughly about 5 days prior to the entry. And that's it. And basically, this particular strategy had about 5 rules associated with it. Now, if you want to trade the E-mini market, well, let's go back to the 3rd of this past week, which was on Wednesday. The market had a very negative day. We were in a down trend the entire morning. And as you can see, right off the very bat, in the first 10 minutes of the day, strategy number 4, one of our premier strategies, issued a sell signal to go short the E-mini. Now, had you stayed in as long as you could using our more aggressive version of this, you could have generated about 8 points gain within the first hour. Okay, how many indicators were we using? Once again, just one, the buy-sell line of the 50-period simple moving average. Let's say you like to trade the Forex markets. Well, I always like to use this example, going back a little bit further, back to December, but here was probably one of our most significant signals generated in the Forex markets on the daily charts in the dollar-yen. Going back in the beginning week of December, we issued a strategy number 5 buy signal. All right, this is once again based off of proprietary candlestick pattern and using our proprietary rules and one indicator. That indicator, well, the 50-period simple moving average. Had you stayed in this trade long enough using our most aggressive way of trading, you could have generated close to roughly about 10 points very easily, okay, which would have been well over $10,000 trading one lot. It's very simple. Now, these are really nice trades. These are home runs. We're not saying and guaranteeing that each one of our trades will produce gains such as this, but we're just trying to emphasize how simple it can be to get gains, which are really off the charts. We're mostly trying to look for these small little singles, as we said before. But the main thing, whether you're looking for that big home run or those small singles, we're looking to keep our trading as simple as possible. So what's the lesson learned? Well, let's review. Remember, we talked about how most people are interested in overcomplicate their trading. In fact, our one member here in the email that was sent to us this week was interested in knowing how many indicators to use, because we've been taught that we should be using a lot. One will confirm the other, or if one doesn't give us a clear signal, another one will. Well, let's review. The road to success is paved in simplicity. If there's one thing you can get from specialist trading, it's that to keep your trading as simple as possible. I know you've all heard that before. You've heard of the methodology has to be suitable to KISS. In other words, keep it simple, stupid. And it really is true. As I said before, when I first started trading, I struggled tremendously. I just couldn't get ends to meet. I would have 10 great trades followed by one disastrous trade. And at the end of the year, I had nothing to show for all my hard work. As soon as I started to strip away these things which I had for some reason been taught would make me successful, as soon as I let go of them and really put them by the wayside and just stuck to the basic, real basic format of trading, then I started to get on that road to consistency. So please remember, the road to success, and by success we mean consistency. We're not saying by success you're going to be a millionaire in the first 3 months of trading, but the road to success so that you're able to trade 10, 20, 30 years down the road is paved in simplicity. So in order to answer that question, how many indicators you should use? Well, it all depends on the strategy. In conclusion here, it really depends on the strategy, but if we're looking at the majority of everything we teach and use here at Specialist Trading, we have probably no more than 2 indicators at a time in any one of our methodologies. So, as we always say in conclusion, learn this strategy like the back of your hand. Understand the process entirely, and then, even before trading it with real capital, paper trade. Paper trade a week, paper trade a month, paper trade 6 months. It doesn't matter as long as you fully understand how the process works in full time. As I just stated in the last 15 minutes, our edge here is consistency. This is the one thing we're trying to really bestow on all of our members, is to have that specialist edge, which is consistency, which is all about hitting singles. As we conclude here, I ask that you take one last look at our disclaimer. I showed you performance results from some signals that were generated using our strategies this past few months. But please remember that we can in no way guarantee that any of these results will be repeated in the future. We're required to show you this in the beginning and in the end. Once again, thank you so much for attending today, these webinars. We do this, we send this to all of our members as well as people, prospective members of Specialist Trading, so that we can hopefully educate them, give them a little bit more knowledge, and hopefully elevate your trading. Thank you so much for joining us this week. We shall see you right back here next week with another weekly stock, E-mini, and Forex lesson. Bye-bye.